Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Welcome to your Tuesday evening edition of Stock Picking Fisticuffs. You're watching CNBC Africa, first in business worldwide. I'm Bruce Whitfield, judge, jury and executioner here on Share Shootout, the most vicious stock picking show on television. Where is the real Northwest? Where is a Swiss roll really from? And how much does Rafael Nadal's left arm actually weigh? We don't know the answers to any of these questions, but what we do have is another battle of stock-picking wits, introducing the reigning champion with a 50-50 win-loss record of 1-1. Nick, I've got my first baby out, but my eyes are baggy. Nic-Norman Smith and his challenger today, Ian, I could beat you with my eyes closed, both hands tied behind my back, Cruickshanks. Over the next 30 minutes, both of our stock pickers will fight it out for the title of Share Shootout King, and the loser gets to play hide and seek with Edward Snowden. Both of our guests have pre-picked 3 shares and are keeping them close to their chests, just like I am over here. Neither knows what the other holds, but at some point during proceedings, they must accept at least one of their competitors' stocks. The longer they leave it, the more likely they are to have to accept something they really wish they didn't have to. In the next 30 seconds, they will have their stock picks, and let's let the Share Shootout begin. You're both veterans, battle-scarred veterans of the game. Ian Cruickshanks, should we make the youngster go first?
Why not?
Excellent. Okay, Nic-Norman Smith from Lentus Asset Management. I like your first pick very, very much. Tell me in 30 seconds why Sasol is such a sitter.
Sasol, this is a great South African success story. It makes fuel oil from coal and from gas. So it's got a great business in South Africa, produces a large amount of motor fuel, makes bundles of cash doing it. It's also reinvesting a lot of their profits into America, where you can buy very cheap shale gas, and they've got a technology which converts that into oil. There's a massive disconnect between the two prices, so they take care of that arbitrage. Attractively priced, single-digit price to earnings multiple, nearly a 5% dividend yield, high barriers to entry, fantastic business.
There we go. You can't possibly pick a hole in that, or can you, Nick? Can you? And Cruickshanks, he's Nic-Norman Smith. You can see how easily I could make the mistake.
On the risk, he may not have other investor-friendly stocks. I'll go with this one.
Okay, because and you talk about risk, that he might not have other investor-friendly stocks. But what David Constable, the Chief Executive Officer of Sasol, is doing is taking the farm and going off to Louisiana, to Lake Charles, and betting the livestock, if not the entire farm, on a project in the gas fields of Louisiana. High risk, high cost, potentially high reward.
They have bet the farm, as you put it, in the past, in the Middle East, on the gas to liquids fuel technology that they've put into practice there. And so I think that they are strong on strategy, and I have to admit that I might have considered this stock as one of my favorites for today. You
might have considered it as one of your favorites, Nic-Norman Smith. However, considering that this is the biggest sitting duck on the market at the moment, if you believe the good story that the both of you are telling, why is it trading on a multiple of under 10?
Well, the resource sector in general has been under quite a lot of pressure. Also, that gas price that we're talking about just carries on going down. So they've bought these assets and the price carries on going down. That's not actually too concerning for Sasol, because they've bought this feedstock. Fine if it gets cheaper, they're still going to make money at this level. So yeah, all the oil producers, if you look at most of the oil majors around the world, they are trading at quite depressed valuations. Maybe they don't have the exciting growth that some of the other commodities were popular for, although they've fallen out of favor now as well.
But if you look at the rate at which the oil price is still around $100 a barrel, if you look at the rate at which gold and platinum have fallen, these are not particularly useful metals. Platinum, yes, in autocatalytic converters, but gold isn't. Oil at least is useful. The fuel story is a good story. I just wonder why the market is as apprehensive as it appears to be about the Sasol story.
I think one of it is that the oil price is effectively capped now. The biggest importer up to now of oil in the world was the US, and they're going to be energy self-sufficient within 2 or 3 years.
Courtesy of Sasol and the likes in Louisiana, taking gas off the ground.
And new discoveries, the ultra deep finds they're getting off the in the Gulf, and technology is allowing them to reach those nodes, which they weren't able in the past. They're remining some of the land-based oil wells. So that's also bringing in a new source there. And they've got gas deposits offshore on the west coast. So it's going to be less oil imported into the biggest energy consumer in the world.
Quickly, Nick, because we're not fighting, and I don't want to waste time not fighting.
The one key, China uses 10% of the world's oil. There is a massive upside potential. A few years ago, everyone was going crazy about China, and they paid too larger prices and they got burned. Now China is a bit out of favor. The reality is they use 10% of the world's oil. There's significant upside potential for that.
So Sasol, you love it almost as much as he does, if not more. Therefore, it gets the great big Cruickshank thumbs up. So you're in the game now, Nic-Norman Smith from Lentus Asset Management, the independent analyst Ian Cruickshanks, on a not too dissimilar theme, but a considerably more adventurous pick. In 30 seconds, Wescoal, why?
Indeed. The primary source of energy worldwide is oil. The second biggest source of energy is coal. Coal is also used to produce oil. So there's two-pronged for the product there, very much so. Wescoal is classified amongst the junior miners. Government has said publicly they are going to favour the junior miners. There's the opportunity or possibility of consolidation. I went along to the presentation of their annual results, and they were strong in this. So I think that they have an opportunity for growth there, also for government to ensure that they get allowances from the Richards Bay terminal for exports.
I think the clock has stopped. I just can't hear it very clearly. So to my little elves, wherever you are, elves, if you could turn up the clock just a little bit, because I don't want to prejudice either one of my clients, my guests this evening, because Wescoal, market cap of 260 billion rand in the coal junior sector, nice and risky. He's been to the presentation, and he is feeling frisky about Wescoal anyway. So it rhymed. Give me a sense of it, Nick.
Junior miners are clearly higher risk. The concern is if there is a downturn in the industry, which there often is, resources are cyclical, can these guys actually stick it out, or are they going to burn too much cash before the world turns around? That's why I like the stronger ones. Also, we're talking about Sasol. If you compare the two, Sasol has some form of pricing power. It earns better margins because it can convert that coal into oil, and it's a premium product.
It is doing what South African government says every resources producer should do, and that is beneficiate. It beneficiates. It has got the pricing power. Wescoal is a price taker.
Well, exactly, and that's why commodities businesses generally are not the greatest businesses, because you are often price takers.
One final roll of the dice to defend yourself before he shoots you down, because I know he's going to.
On the price basis, they've all got almost a guaranteed price from Eskom. Eskom have said they will establish new power stations in the vicinity of existing coal mines, and Eskom will also favour the junior miners.
But how long does it take to build a power station?
Judging by South African experience, a heck of a long time. Yeah. In the meantime, the coal is there to supply those existing and presently developing mines, and they're going to get favoured, and they've had a good profit record so far.
Okay. Is it not enough to convince you?
Not enough. Basing my investment thesis on Eskom and or the government is things can change quite quickly. So that gives me, I'm a little bit nervous.
All right. You think you're nervous of this one, you should see the next two, but you're shooting it down, are you? You need to say the words. I shoot it down.
I shoot it down.
He shot it down. You were shot down. All right, just to confirm these things. Now, if you thought that was a slightly crazy pick from the fringes of investment bravery, wait for this one. In 30 seconds, York Timbers. Go for it.
York Timbers, this is a big South African timber mining company. It has about 20% of the market. So essentially it grows trees, it mills them, it sells them off to the building industry and various other players. It's trading at tangible book value. It has a great set of assets. Remember, the barriers to entry in this business, it takes 5 to 20 years to grow a set of trees. So you're not about to get 1 million competitors coming in. It's helped by a weaker rand, which makes it more competitive. It's been under pressure in the last few years, but it's strengthened its balance sheet substantially. We've seen the weak rand coming through, and demand should pick up as well.
All right, demand should pick up. That's one of those famous things, like this time it's different. Demand should pick up, and it will pick up one day when a guy called Noah comes along and needs to build an ark. Is there any other reason why you might want to buy a York Timbers share?
Why I don't want to is looking at the experience of their strategy. It's always been late. It's never been ahead of their markets, and I think they got stuck in a rut and didn't move quickly enough. And this is why we're always saying This time it will be different. I wouldn't rely on that. And that's my big objection to it. It may look sound now, but I just don't think that they can move with changing times. And this is a rapidly changing world.
It is a rapidly changing world. I look around us in where we stand in the studio. There are probably 20 construction sites within a 5-minute walk. Not a single piece of timber is being used in modern day construction. Yes, in domestic house building, all of that sort of stuff, huge housing backlogs for the trusses and all that sort of thing. But it's just not exciting.
Exactly, and that's why you can buy.
Oh, come on.
That's why you can buy it cheaply.
This is an
a
adventurous
very dull,
program.
boring business. What excites me, Bruce, is returns, not the exciting
Okay, but what
business.
sort of returns will I get?
Well, you're buying these assets at book value. That book value is quite low because there's been a historical oversupply of logs. We had quite a few forest fires, which means they chopped the little bits off and sell it in. They had too much capacity, York. They made terrible acquisitions as Blackstar owned them a couple of years ago. Overpaid massively, but that's been cleaned out. They've raised more money. So this company's on a solid footing.
Land
so they can
claims.
sit and wait. Yeah, there is around 20% of the land is under land claim, but you're paying such a cheap price for it that really is all in the
Ian
price.
Cruickshanks, final thought from you before you shoot it down.
You mentioned building materials, and we may see some wood there. I have a son who's an architect, and he tells me even in housing, the move is away from wood to aluminium or other supports which are lighter, stronger, and so I think there may be limited use, except for ultra expensive housing for wood.
You don't see the wood for the
frame.
trees on this one?
I think the wood is not, it should be for burning.
Wood should be for burning, absolutely. Oh, he's vicious. You shooting it down?
Yes, I shoot this one down.
He shoots it down. He shot it down. So, there we go. Down on York Timbers. He has accepted your Sasol pick, so he's not completely mean on it. But he is going into his next pick, the independent analyst, Ian Cruickshanks. I am interested in this pick because I love the business, but I just don't know how the sector is going to make money in the next 10 years. I'm hoping you can convince me in the next 30 seconds why Firstrand should get your vote.
I like the people behind it, and I'm a great believer in following management as well as following the company. Just looking at how the shareholders are structured, 30-odd% is from RMB. That's the founders of that group. The government employee pension fund has got a big stake. There's not a lot of liquidity, and that's one possible potential there. But they're strong on strategy, earlier on moving. They cut down mortgage lending in around 2007, before the mortgage bubble. They cut down what's unsecured lending in 2011, 2012. And so I just want to finish that if I may.
Oh,
thank you.
40
2
seconds
extra
yeah,
for
okay,
you.
hold on.
Okay.
Carry on.
They move
we
early.
got all day.
They move early.
They do move early. Right.
That's it.
So, Firstrand is your pick in the sector. You want to follow management. Michael Jordan has left the building. Don't follow him just yet. You can do so in about 10 minutes.
Okay.
Firstrand, it's got to be the pick of the bunch in the banking sector. But is the banking sector enticing enough to warrant you investing your money in it?
It's a wonderful business, very high quality. So comparing it to a coal business or a commodity business, this is great. Big barriers to entry. You need all the regulatory approvals. They've got the branches. They've got the.
This is like York Timbers. Yeah. They've got huge barriers to entry and they've got all the branches. Sorry, carry on.
And great management team. The sector, there is clearly some risk there if this whole consumer under pressure story plays out. So yeah, not my pick in the sector. Looking a little bit expensive. I'd prefer Standard Bank. I think it's the high quality player.
Tell me why you grimaced.
I think they're low in strategy. They can't even decide on a single new CEO. No, that's not strong on strategy. And I think they were innovative. They were the market leaders. They got fat and comfortable. And now they're paying the price for it. And I think that's my problem. And that's why I went,
and that's where the opportunity is. But anyway, Standard Bank for another day. So decent business. I think it's a little bit expensive, but I'm a little bit nervous about what's coming next. So
the next one is a great business.
I'm going to go with the quality, and I'm going to accept Firstrand.
Oh, you chicken! Oh, he's frightened. He's afraid. I like this.
He's sensible.
He's afraid. He's chicken. I like this one because the next pick that Ian Cruickshanks will bring up is a market favorite. It's a market darling. It's one that everybody wants to own, but it's pretty pricey. Keep watching as Share Shootout reaches its pinnacle And he picks so far from each of our guests. What we've got from the independent analyst Ian Cruickshanks is Wescoal and Firstrand. And because Nic-Norman Smith from Lentus is a little cautious, he is going with option number 2 against his better judgment. I have a feeling he will be grateful that he did. Nic-Norman Smith's picks this evening so far. Sasol, a big thumbs up from Ian Cruickshanks, who says that he likes Sasol almost as much as Nick does. He nearly chose it himself. York Timbers, just like Firstrand, full of branches. We can't see the wood for the trees, but we will in the second half of this program, coming up in just a moment.